the financial and business development resources for farmers. The Cultivating Success program was established in 2000 by the University of Idaho Extension Rural Roots and the Washington State University Food Systems program. And this is part of our 2024 webinar series. And today, as I mentioned, we're going to be doing the financial and business resources, but you can join us on the 19th for value added and growing markets. We'll also have these webinars recorded, and you'll be able to watch these on our webpage. And so I'll be hosting. I'm the Community Development Ag Horticulture Extension Educator out of the Southern District. And I'm also co-hosting with Colette DePhelps, the Area Educator for Community Food Systems in the Northern District with University of Idaho Extension. Today's speakers, I am delighted to have Marie Baker. She's the District Regional Director and for the Small Business Development Center. We have Ransom Satterley, with the Farm Loan Manager with the Farm Service Agency, as well as Jessica Harper, the Vice President with the Ag West Farm Credit. And so we'll jump right into it because I want to give our speakers lots of time to talk about their programming. And so I'm going to go ahead and stop share here. And if you want to share your slides, Marie, I will do an introduction. Okay, so Marie Baker, she's passionate about entrepreneurs and their journey. Marie's skill set is the ability to work collaboratively and assist clients with achieving their goals. Ms. Baker grew up in northern Central Valley of California on her family farm, and she received her BS in business from Fresco State and a master's degree in organizational development from the University of San Francisco. Marie spent 5 years in banking before starting her own business. Combining her education and experience, Marie went out to consult, coach, and educate small businesses in the Central Valley of California before moving to Idaho. In her spare time, you'll find her hiking, volunteering at the local Rotary, visiting family, or enjoying the great outdoors with her husband and dog. And so thank you for being here today, Marie. I'll go ahead and pass it over to you.
Thank you. Can you all see my screen okay?
Yes, we can.
Great, great. Well, let me get started and I will go fast, hopefully, so that you can understand the depth and breadth of everything that people have to offer today to help you as you build your small farm. I grew up on a big one, but it doesn't mean that we are just as excited about small farms as well. And I preface that because when people hear I'm from California, they're like, what? I was a 4-H'er, so I think I've got some credibility here. And I just want to share with you that the region that I serve is 10 counties in Southwest Idaho, which is Region 3. However, we have touch all 44 counties in the state of Idaho, and I'll teach you more how to connect to get our no-cost consulting services. Let me tell you a little bit about the SBDC. We are a consulting arm and of the SBA. It is no cost to you. This is your taxpayer dollars at work. We're founded in 1986 here in the state of Idaho. There are SBDCs across the country, and you'll see all the different regions. So depending where you're calling in from, we have someone that can help you. Here in Southwest Idaho, we have 2 business accelerators as well, which I know you're all with small farms, so it really probably doesn't affect you as much. But if you know someone, we do have places where people can come in and think an incubator type of situation. That we have one in Nampa in Canyon County and one in downtown Boise. And then our main office is Boise State. So this is the Business Accelerator in Nampa. It's 38,000 square feet. We co-host a lot of businesses here. And then this is the one in downtown Boise. We are funded in part. Many people ask, oh, how can you do this? And I like to, again, say it's your taxpayer dollars at work. 1/3 of our funding is from the SBA, which is a federal pool of money. 1/3 is the state of Idaho, and another 1/3 in our region, we partner with Boise State University. Other regions part with different universities or colleges. And really, what do? We help you build, we do build better communities, but more importantly, we help you build your business. Our goal is to accelerate your business success. If you want to turn your business into something that you can have a sustainable lifestyle, that is what we're looking to help you do. And we do it mainly through one-on-one consulting and the accelerators, as you saw, as well as training and referrals. So big part of this, think about us as your mentor along the way as you're building your business. What does that look like? And we have consultants that work with you and meet you where you are in your business, and then kind of help you strategize what this looks like. Where do you want to be in 5 years? Let's make a plan to make that happen. And the key I want to impress upon you is this is a study, and it's been some time ago, but it was a 20-year average. We're actually working on another one recently, is that the red column are SBDC clients, and then the gray are average Idaho businesses. At the end of the day, people that get help, many of you I know are out there, you're doing it by yourself, you get frustrated. In fact, I got an email today from one of my clients who owns a flower farm. It's a typical type of a small agriculture operation, and we work really hard to work on pricing, cash flow, where she wants to be in 5 years, and all those things that matter. Those are the foundations of you building a strong organization. And as you can see, people who've worked with us typically have a better sales growth and better employment growth than people who do not work with us. At the end of the day, we're here to help you at any stage of your business, and we can help you with financials, with marketing, with HR, with planning, all sorts of little subtle things that maybe you may or may not know how to do. What we do know is you're probably fabulous at what you do best, and that's farming or ranching. We can help you with all the other pieces that will make it a success. And it's very easy to connect with us. This QR code, it goes to our IdahoSBDC.org website. And all you do is you simply fill out a form that says, I want help. It goes to, and there's 6 regions, pick the region where you live, and it will go to that office and someone will get back in touch with you. If it's our office, what will happen is you'll get an email saying, thank you for reaching out to us. Here's a link to schedule an appointment with, whatever consultant our scheduler feels would be best for you. Our first calls are always via Zoom because we serve 10 counties and it's convenient. And then the consultant and the client determine what's best for them. I've been out to many farms to see what it looks like, or other businesses. Anyway, thank you for the opportunity to be here and share what the Idaho SBDC can do to help you and your business grow and thrive.
Thank you so much for that, Marie. It sounds like you do some wonderful capacity building to make sure people are going to be doing their best in their business. And so thanks for plugging in that resource to the webpage into the chat, Colette. And if you have Q&As for any of the speakers, please plug that into the Q&A section, and we will take those questions at the very end. The next speaker, once you have all your ducks in a row and you've worked with the Small Business Development Center and now you're ready to go seek some funding, I'd like to introduce Ransom Satterley, and she is the Farm Loan Manager for the Farm Service Agency out of Spokane Valley Service Center. Her office serves the eastern counties of Washington State, from Pend Oreille down to Aston and Garfield County. She graduated Washington State University with a bachelor's degree in animal sciences in 2018 and joined the Farm Service Agency in 2019 as a farm loan officer trainee. And so thank you so much for being here, Ransom. Looking forward to learning about your program.
Awesome. Yes, thank you, Melissa, for that introduction. As she mentioned, as before, I'm Ransom Satterley, the loan manager for the Spokane Valley FSA office. Let's just get right into our direct loan program. Okay, so today I'm going to focus on 3 main things: FSA's purpose and mission, the direct loan program, and then a way for you all to contact your local FSA representative. Okay, so FSA's purpose and mission is to provide opportunity for farmers and ranchers during good times and bad. Our loan programs are available to beginning farmers, established farmers, and anyone in between. Originally, the agency was named the Farm Security Administration, a division of the U.S. Department of Agriculture created to help rural Americans during the Great Depression and Dust Bowl era. So the Farm Security Administration underwent a name change in 1946 to the Farmers Home Administration, and then before finally transitioning to what it's now known as the Farm Service Agency. Outside of the loan programs FSA offers, the main reason most farmers know about FSA is due to the various disaster and crop-related programs we provide free of charge to those impacted. So FSA has like various cost share programs depending on crop type. We offer low premium insurance on typically non-insurable crops, as well as various livestock and forage programs. So as a recent example, the Gray Fire here in Spokane triggered a few forage and livestock programs specifically tied to wildfires that were able to help recoup replacement costs to our hay and livestock producers. So today I'm going to be focusing on the direct loan program through FSA. So FSA provides direct loans to help farmers and ranchers get the financing they need to start, expand, and maintain a family farm. As a government agency, we are not competing for business in the lending world. We're meant to help and target those who do not qualify for commercial credit for one reason or the other. Oops. So you'll notice family farm comes up a lot, both on our website and in this presentation. As a quick rundown, a family farm to USDA is a business operation that produces ag commodities for sale in sufficient quantities, so it's recognized as a farm rather than a rural residence or hobby farm. The majority of the day-to-day management decisions are made by the borrower or the members responsible for the farm in the case of an entity. The same people are providing the labor necessary to operate that farm. So full-time hired labor is only permitted to supplement family labor and reasonable amounts of temporary labor for seasonal periods during peak workload as well. So essentially, we just can't provide loans to those looking to buy land to then rent or lease out to a farmer, or those that are not intending to farm for profit. Another term that surprises a lot of people is beginning farmer. A beginning farmer to USDA is anyone who has operated a farm for less than 10 years. So the majority of our direct loan programs require at least 1 year of previous farm management experience. Typically, we get the evidence for that through profit and loss or a Schedule F tax return form. So not exactly beginning, meaning with no previous farming history, as most people assume. I'll kind of get into the eligibility requirements for the loan types in the next slide. So loan requests must be essential to the success of the farm and can be used for a variety of purposes. You could buy a farm or ranch, you can enlarge an existing farm, you could even have costs associated with reorganizing a farm to improve profitability, livestock purchases, buying equipment. We also provide operating capital for annual expenses, and we can even refinance carryover farm-related debts. So FSA can provide 100% of the financing for the request, provided the amount is within our loan limits. So reorganizing a farm can include switching from till to no-till practices, changing from a stocker to a cow-calf operation, or entity transitions where the next generation is going to be taking over the family farm. So as a government agency, we have quite a few differences in the loan making process than commercial banks do. For one, we can't really provide pre-approval letters or offers. We only make an official determination on an applicant's eligibility for a loan and conduct kind of a feasibility analysis of the request once we have everything needed for a complete loan application and all of the supporting documents that we typically ask for. Okay, so there are two basic qualifications that need to be met regarding direct loan eligibility. The operation must be an eligible farm enterprise, and the request must meet general eligibility requirements. Loan funds cannot be used to finance non-farm enterprises such as exotic birds, tropical fish, dogs, or horses used for non-farm purposes, so such as racing, pleasure, showing, boarding. I would say that in general, loans for dogs and horses aren't typically going to meet our eligibility requirements unless you can show that they are only going to be used for farm purposes. So general eligibility requirements encompass a few more basics that all applicants must meet. So a few of those include no convictions for planting or cultivating controlled substances, the legal capacity to incur the loan, an acceptable credit history. Applicants must be a U.S. citizen, non-citizen national, or legal resident alien of the U.S., have no previous debt forgiveness by FSA, and are unable to obtain credit elsewhere with or without an FSA guarantee. There's a few other general expectations, and one of the key ones that a lot of people get stuck on is having sufficient managerial ability to assure reasonable expectation of loan repayment. So I'll kind of address the two biggest general requirement questions we get, which is what is an acceptable credit history and what is sufficient managerial experience. The first on credit history is that we do not rely on credit scores to make our loan determinations. Applicants are expected to have acceptable repayment history with other creditors, evidenced by timely repayment of debts. No one is automatically disqualified if there are isolated incidents of slow payments, no credit history, or if it can be shown that your recent credit issues were temporary and beyond your control. If an applicant does have active collections that are found through our credit check, those have to be satisfied before we would be able to approve and close a new loan with them. If there are multiple late payments on various different accounts, it's unlikely a prospective applicant would meet this requirement. So the second one regarding managerial experience is a little bit more complex. The level of management ability required will depend on the operation and then the amount of loan you're asking for. So every application is evaluated on a case-by-case basis. In general, operating loans to purchase equipment, livestock, or operating capital require at least 1 year of previous farm management experience. Like I said, evidenced by tax return, profit and loss form. For a farm ownership loan to buy land, we typically look for at least 2 years of previous management experience. We also consider if an applicant has college credits in agriculture, on-the-job training as hired farm labor, if you've completed a farm mentorship, internship, or apprenticeship program, among other avenues that develop someone's understanding of running a farm. I would say in general, if you have any questions about your prospective eligibility for our program, feel free to give my office a call. I include my contact information a little bit further down. So the only loan program that we offer that requires limited to no previous experience is the microloan program. This type of loan can be used for all the same purposes as the direct operating loan, but the maximum dollar amount under this program is limited to $50,000. So direct operating loans, as mentioned on the slide, go up to $400,000. This is a collective maximum, meaning you can have multiple operating loans provided the total combined is under that 400 limit. So this also applies to individuals and farm entities alike. Even if you have multiple individuals in an entity, that entity could only ever borrow $400,000 from FSA. Farm ownership loans go up to a maximum of $600,000, and it's the same rule for land. You can have multiple land loans with us, provided the max is under 600 or 600 exactly. So interest rates for all loan types change monthly. For March 2024, the direct operating loan rate is 4.875%, and the farm ownership rate is 5.25%. All our rates are fixed at the time of loan closing. We do not provide variable rate loans or lines of credit. Lastly, the loan term length is tied to the purpose of the loan itself. For operating capital to pay for fuel, supplies, etc., the loan is typically due in 12 to 18 months or whenever crop or livestock is sold. With purchasing equipment, livestock, or other more tangible intermediate assets, the loan term can be stretched up to 7 years. For financing land, farm ownership loans are typically set at 30-year terms, but they do have the capacity to go up to 40 for cash flow purposes. So like I had mentioned before, I'm Ransom, the loan manager for the Spokane FSA office here on Mission and Argonne in Spokane Valley. So if you ever come around the office, you might also run into my loan officer, Ryan Hutchins. He's just as knowledgeable about our programs as I am, and a really great resource for information as well. FSA offices serve area-specific regions, and so Ryan and I cover the eastern Washington counties: Pend Oreille, Spokane, Stevens, Lincoln, Whitman, Asotin, and Garfield. If your main operation is going to be based in or will be based in these counties, we would be your FSA contact. I included the Lewiston FSA office contact, Brian Hill. Unfortunately, he couldn't make it to this webinar, but he will be serving a lot of the western Idaho counties as your local FSA contact. And so on this same slide, there's a link to a USDA locator map, which if you go to the link, you can actually click on the state and county that you're based in, and it will pull up the names, addresses, and emails of the people that would be serving you in your county. With that, thank you, Melissa and the WSU team, for inviting me to be a speaker. Feel free to reach out to myself or my office if you have any questions about eligibility or want more details about the programs themselves. And with that, I guess I'll pass it back to Melissa.
Great. Thank you so much, Ransom. I see that there's some questions coming in to the Q&A, and if they came into the chat, we'll make sure they get answered during that Q&A time. We have one more presenter, Jessica Harper, and she is the Vice President of Ag Vision, Ag West, and it focuses on initiatives that support the success of young, beginning, and small YBS producers. The Ag Vision program includes a suite of varied financial and educational products and services to help YBS producers thrive. Through this program, outreach to producers and other organizations serving them is vital to ensure producers from all backgrounds and production types know these resources are available. Jessica attended the Regis University in Denver, Colorado, holds a bachelor's degree in business administration. She was raised on a family orchard in Central Washington, and she spent the last 20 years working in the Ag Center. Thank you for being here, Jessica.
Melissa, today. I'm really excited to get to talk about our Ag Vision program. As Melissa mentioned, this program is designed for young, beginning, and small producers specifically. But what I want to do is just first help orient you to understand kind of the differences between the Farm Credit System and the Farm Service Agency. A lot of our beginning producers that we talk to aren't really sure the differences and all of that, especially because Farm Credit is in every state in the nation. So I'll just begin by saying that, we're a financial cooperative. So essentially, we are owned by our borrowers, and all of our borrowers are farmers and ranchers and folks in the fisheries and timber industry. So I frankly kind of love that, because I feel like the decisions that our board makes and the decisions that all of our members make when they vote is a vote for agriculture. And we are located throughout the West. So in terms of my mention on the differences between the Farm Service Agency and Farm Credit. So I show the United States here because there is a Farm Credit Association in every state. I work for AgWest Farm Credit, and we're located in the West. But basically, Farm Credit was established about 107 years ago during the Depression, because at that time, between weather conditions being what they were and just the state of the economy during the Depression, nobody wanted to lend any money to people that were farming. And Congress, really recognized that that was a national security issue, that we needed to feed this country. And so with that, the Farm Credit System was born. And our specific mission is supporting agriculture and also rural communities through a lot of work that we do on the rural grant side and with our Country Home Loan Program. But we're proud of serving only agriculture. And what that means is that we're reliable in terms of, unlike other lenders that are kind of in and out of this market, depending upon the market conditions, this is all that we do. And we understand the cyclicality of agriculture. And so for that reason, we're willing to kind of ride the tides out as different markets recover. Also, the beauty of that, especially where we live in this area in the West and the Northwest, is that we just have such an abundance of diversity in our geography that it's provided for a really beautiful mixture of diverse ag producers. And that makes us very safe from a credit perspective. It's a lot like a mutual fund. So this is our coverage area. AgWest covers all of Alaska. There's a lot of beautiful things going on in Alaska and small agriculture right now. But also Washington, Oregon, Idaho, and Montana, those entire states, as well as those highlighted areas that you can see in Arizona and California. Those areas that are not shaded actually are represented by other farm credit associations, but I know we're working up here in the north, so I don't have to worry about that today. I work in our Spokane office, and 100% of my job is focused on this program called Ag Vision that we're going to talk about in detail here in just a moment. But in terms of what we offer, a lot, ag producers need a whole lot of different things in their day-to-day life. So we offer traditional real estate financing, and that could be for just a traditional farm or a ranch. We offer an operating line of credit. So, that's when you look at your finances for the year ahead and you need to decide, okay, what are my cash flow needs for the year? So we'll, provide funds up front so that you can manage your budget throughout the year and then pay us back at the end of the year. We've also got a rural residential home loan program. And that's a really neat program because it's designed to help people, a lot of part-time farmers actually, folks that maybe just want to buy, 5 or 10 acres, and it's maybe, near a city. It's kind of rural, but it's, not a giant farm, for instance. And so we have kind of a lending process set up to make that purchasing experience feel a whole lot more like if you would buy a house in town. But we can make special lending considerations for unique things on that property if there's, an orchard or some kind of an ag element to it, but again, on a smaller scale. So that's a really unique offering in the marketplace. We offer equipment financing, crop and livestock insurance, including we can be brokers for the microloan or the micro beginning farmer micro insurance policies. I know the USDA came out this morning with a kind of a lending finder for that. I don't know if you see any of those, but we provide crop insurance and livestock insurance through Whole Farm, the beginning farmer program, and many others. We also have in-house appraisal, which is really nice because then we don't have to always, we call feed that out to somebody else. We can get those appraisals turned around a lot faster. And then we offer a variety of other financial services. We have specialized lending programs for larger agribusinesses that are, maybe more common and traditional that we all think of in agribusiness world, but also for timber producers and those in fisheries, primarily out of our Seattle office. We serve a lot of our Alaska fisheries customers. I work specifically, as I mentioned, on financing and education for our young, beginning, and small farmers. And then we also have a whole team of people that focuses strictly on management education and networking to help make sure that our producers are well connected. They live in remote areas, and frequently it's hard to get away from the farm and take classes like this one. And so our team makes sure that we can deliver that content to them based on where they are. So we're going to pivot now to just talking about the program that I work in called Ag Vision. And so we understand that there are unique barriers to entry if you're a young, beginning, and small farmer. Now, I want to get the definitions right in case you're curious what those are. So young is anyone who is 35 years of age or younger. Someone who is beginning has 10 years or less of farm management experience. Now, I want to touch on that. I'm not saying that like if you worked at a farm as a, helping somebody out or you were a laborer, that does not count. This is when you started making those decisions for, inputs, harvest dates, sales prices. You were running that farm. Sometimes our beginning farmers will shortchange themselves because they're really proud of their time in the ag industry. So they'll show up and say, I've been farming since I was 15. Well, you weren't probably making management decisions for that farm at that time. So I just want to clarify that. And then small is when your annual gross farm income is less than $350,000 per year. So a person only has to meet one of these three criteria to be eligible for the benefits that I'm about to share. So this is just an overview of all the kind of bells and whistles that are involved underneath of the Ag Vision umbrella. And if we think about kind of starting over on the left with a new producer grant, I want to share this with you because you may be eligible for this or you may know someone who is, but we identified that there is a need in the marketplace and thankfully there's others out there. WSDA in Washington has got a great listing of grants available. The Tilth Alliance has got some grants available and others, but we wanted to have a grant for new producers that, because of their lack of farm experience already, have barriers to entry. And so this is a $15,000 grant that is awarded to producers who have not been farming for more than 2 years or plan to start in the next 2 years. Then moving over to outreach, we've got a team of staff throughout the association that are Ag Vision ambassadors and leads that work specifically to serve certain markets within the kind of the Ag Vision umbrella that we really want to focus on, including farmer veterans, historically underserved producers, growers for food hubs, and those that are just getting started on incubator farms, as well as our next generation of producers that might have grown up on a family farm. Then moving over to our next product that we have that is just, again, only available if you're a young, beginning, and small farmer is called Thrive. And that's a product suite that has 3 different loan options in it that is has flexible underwriting guidelines and really some unique terms and conditions that, again, help make it easier for people to get started in agriculture. Then everyone else, if you are young, beginning, or small, has all of these other benefits in this column here. From modified underwriting guidelines, I'll just give you an example what that means. So if I'm working with a borrower that is 25 years old and they're a new farmer and they have a 4-year college degree and they've got student loan debt and they may or may not be thinking about buying a house or a property that they want to farm, we understand that their balance sheet is not going to look nearly as good as somebody that is quite a bit older because of some of this debt that they've got as a younger person. And so because of that, we've built in some underwriting guidelines that will be softer to help them get in. We've also got an incredible pricing program that I'm just so grateful that we are offering that helps reduce the interest rates for this sector of borrowers. We'll offer up to $3,000 in fee waivers for appraisal and loan origination. People don't think about that, but that's $6,000 that a lot of times customers have to otherwise finance or pay out of pocket when they're getting a new loan. And we will cover that for our Ag Vision customers. Then we'll also provide up to $1,000 in technology and education reimbursement expenses. So frequently, I'll be talking to someone and they'll say, gosh, my computer just crashed and I don't have QuickBooks anymore, or, on and on. You need a computer, you need a printer. Some people have terrible internet and they want to, purchase some technology that can upgrade their Wi-Fi. So we will reimburse them up to $1,000 for those types of purchases, as well as to attend certain educational events that are business or production related. And that could mean, there's a conference that you want to go to that is in, you name it, and maybe it takes a plane ticket and a hotel room. You send us the agenda and we'll reimburse you up to $1,000 to do that. And then we've got higher advance rates available. So what that means is that your down payment is less than you would normally have to pay in a traditional ag lending program if you were not young, beginning, and small. And then lastly, this column is really just all around education. We've got 2 in-person conferences that we hold each year where our customers go, and depending upon what type of producer they are, our Ag Vision Summit is designed for new producers who don't have as much background in agriculture. And then the Next Gen Summit is designed for young people that are going to be taking over family operations that they've been involved with, growing up. We've also got a program called RateWise, which is kind of a bonus interest rate savings program layered on top of the preferred interest rates here that are tied to education. Frankly, classes just like this one, we would offer a RateWise class credit for attending this program. And what you do is you earn credits up over time. And then when you're ready for a loan, you essentially let the loan officer that you're working with know that you want to cash in your RateWise credits. And then they can add that as an additional interest rate reduction. And we do that because we want to support our producers continuing to increase their skills in business management and running their operations. And then we've also got a variety of on-demand educational options, and really happy now that we've got those available in Spanish. So this, I touched briefly on the RateWise program, but here's, kind of just a summary of it, as well as the website. And then I'll put that in the chat once I'm done here, but it's on any new loan, and you can actually get up to 0.75% interest rate reduction. And that would be with 30 credits. Every hour of content is worth a half a credit for external content that our business management center doesn't put on. And then we'll offer a 1 RateWise credit for every hour of content for things that we do. So there's more information when you register, but this isn't just for customers. We have a lot of people, for instance, that are thinking, probably a year from now, I'm going to be at the stage where I think I'm going to be ready to maybe get a small operating line or buy some equipment, or maybe even buy my own property. And so those people are really smart because they're thinking about RateWise and they start earning those credits. And then that way, after a year's time in all these classes, they might have 30 credits. And 0.75% interest rate reduction, especially right now with rates as high as they are and things just costing what they do, can literally equate to thousands of dollars in interest rate savings. That's just money back in your pocket. So Thrive, I mentioned, is this is actually a new product. We've had some other products in the past that had some different kind of limitations, and we just decided to put everything all into one umbrella. So this Thrive product offers 3 different options. So we know that, for instance, a 1-year operating line can really help people, and we've got a maximum loan amount of up to $75,000. We've got a loan opportunity with Thrive up to $150,000, and that's for down payment assistance primarily. That's going to be for people that they're maybe buying a piece of property, and we could even be financing that piece of property, but they're a little bit short on the down payment. You can actually pair it with a Thrive loan to help offset some of that difference. We understand that one of the challenges is that a lot of times producers aren't quite eligible yet for farm service agency financing. And the down payment can get really tricky, especially if you're young and you've got, other debts that you've brought on, student loans, or, I just bought a house or what have you. So this startup capital option has been really helpful to getting people on properties that they probably wouldn't have been able to do otherwise. And it also helps with down payment assistance on larger equipment purchases too. And then the last thing that we have here is this amortizing term loan. And so basically that is, again, a loan up to $150,000 that can be used for just the 100%, purchase of a piece of equipment, breeding livestock, or making other improvements on your property. And I say 100%, not in that, it's always 100% financing, but this third one is just a standalone loan option, whereas the startup capital loan, if you're using it for down payment assistance, might be two loans that are paired together. So I just want to touch really quick on kind of how ag lending works, because I think that the biggest thing that I run into is that, folks' background has been in like commercial lending, or not commercial, consumer lending. And so they're used to providing, simple application, and their credit score is ran, and then you get an answer. And to Ransom's point, you might even get a pre-approval letter. But when you're making an ag purchase, it's a little bit different. And that's because the agriculture piece is helping to repay your loan. It's not like your paycheck. So there's a few extra things paperwork wise that we need to do to help understand your repayment capacity. So we do require a business plan for quite a few of these products in the Ag Vision program, including the Thrive product, which for a lot of our new farmers is a really good option. And the reason why that business plan is important from our perspective is we want to know that you've thought through all of the different sections that a business plan covers, and know that you've thought of those and you've weighed the pros and the cons. And if there's something that is, more of a challenge, you have an offsetting factor to mitigate that challenge. And if you don't have that, it doesn't always give us the reassurance that you're ready to take that step because you haven't necessarily thought through all of the details. So I just wanted to give you kind of a lender's perspective on why we see that document is sincerely very important. And there's a tool out there, I don't think I mentioned it on the other slide, called Ag Plan. And Ag Plan is through the Center for Farm Financial Management and the University of Minnesota. It's free, and it's an online resource that can help you build a really beautiful business plan. It's got I think there's 7 different templates on there. You can pick if you're direct to consumer, a commodity grower, a number of different things if you have agritourism. And then along the bottom of it, there's all these resources and videos. So if you get to a section on, I don't know, the the SWOT analysis, and you're like, I don't really know what I should say in this regard, there's actually tabs where you can look at examples. You can watch short videos, and it just helps you just get a really nice business plan done pretty fast. You can also share it through the portal to somebody else. So if you're working with someone, maybe another type of business coach, and you want to share it and say, hey, what do you think about this section? They can provide feedback. You can add attachments, which, we'd like to see financials that are attached to that. So you might have heard about the 5 C's of credit. These are the things that we look at. Character, the business plan kind of falls into that. It shows that you've done your due diligence and have a thoughtful plan in action. It also looks at your credit history. We do want to see a 650 credit score. That's just kind of the opening gate for that. We understand that things happen and people are building credit. Now, if you have no credit score because you've never used credit, that's different. But a 650 credit score is something that we look at. We also want to see a balance sheet. That's just, what are your assets? What are your liabilities? Again, for Ag Vision, we'll be flexible on those and understand that might not always be as developed as we expect to see it in later years. We'll look at the ability for your farm to, earn income to repay the loan, but we'll also look at off-farm income. We know a lot of people have got off-farm careers, and those are very important to help with your repayment capacity. Then we want to look at the collateral. So that's basically, what is it that is the pledge behind the loan? So, for an operating line of credit, a lot of times it's crops. If it's going to be real estate or farm, that's the land. So that you have to have some form of collateral to secure the loan. And then lastly is conditions. We're going to want to go to your farm. We're going to, if you have an operating line of credit, it might be, we want to reconcile that cash flow budget with you on a quarterly basis and make sure that you're just spending in a cadence that was agreed upon when we established your dollar amount that you needed. So those are just kind of the reasons why we want to look at those things. these are the three primary financial statements that we look at. And the good news is we have on our website an on-demand webinar for each of these categories that are just for 1 hour. And you can just access those, whenever you want to. There's templates in there, and it really helps just kind of reduce the uneasiness of how do I prepare a cash flow budget, because you can just access this quick course anytime that you want to. And then lastly, just again, the reasons why, we have a reason for why we ask for what we do. The budget, your cash flow budget, is what is your plan? When are you going to run out of money in this next year in your budget because your expenses are higher than your earnings? So as long as we have a plan for that, we can address that. The income statement is just what's the reality of what we think we can accomplish, in a conservative fashion in case things happen that were unexpected. And then the balance sheet is just the inventory of where things stand. So as I mentioned, we've got educational resources available, and I'll put those in the link, but anyone can use these at any time. And I would encourage you to consider using them, because they, regardless of where you go or what you do, they're just going to make you a better farmer in the long run. I mentioned our new producer grant that's open right now, and it's available on our website. And that is the $15,000 grant that's really celebrating just all the amazing things that our new producers in the West are doing right now. And it doesn't close until the end of May. We'll ask you to watch those recordings that I mentioned, as well as submit a business plan and a cash flow budget along with a 1-page essay. Thank you very much. You can contact us at that email address, or we're pretty easy to find online. Thank you so much.
Thank you, Jessica. That was just a wealth of information. I really appreciate you all being here to share more about your programs. We have a few questions that came into the Q&A and the chat room, and the chat room is full of resources and links about places you can go to get connected to these organizations, as well as some of the resources they shared. But the first question that came in was for the Small Business Development Center, and it was from Stephanie, and she wanted to know if you help with grant writing. Can you speak to that, Marie?
I certainly can. It depends on the type of grant. If there's a specific grant out there that is in the ag-related field, and that I literally have a client right now that's getting a grant, those are typically different. And so we absolutely can help you, because a big part of that is getting all your financials together and getting the things. It's similar to what are the requirements, we can help you. And then in addition to what Jessica was speaking to, if you go to that program and you don't know how to run through it, we can walk you through all those things that you need to do to help develop your business plan, as well as your cash flow statement. We have some really great templates that make it very simple to work through. And we do, it is, all those things are critically important to understand so that you can run your business. And it also does show that the lending institution, that this is something that you've really thought about. So for us, when we work with you, we really want you to be successful, so that when you go in to get that loan or the credit or the grant, you know what you're talking about, you understand the numbers, you have the whole plan together. So we can help do all those things.
Great, thank you for sharing. The next question that we had come in was from Ben, and he wanted to, and I think this was specifically with the Ransom's presentation with FSA. He was curious about sufficient quantities of production to designate a hobby farm versus a farm. And he's curious about specifically about programs for small farms, such as local farm to table.
Yeah, so I can kind of touch on that a little bit. So with any new loan, especially term loans, it's not production that it's tied to for sufficient quantities, it's revenue. So with buying land, we have to show in a budget based on your crop or livestock or plan that your gross farming income will at least be equal to the loan installment for that loan. So as an example, a $250,000 land loan would have, let's see, about a $16,730 payment a year. So when I'm writing a budget for a new loan, I have to show that your farm specific income would at least equal to that payment. And now we also look at non-farm income sources. And I'll be honest, most of our guidelines are kind of a little bit flexible on that. The language is that the gross farming income has to at least be the loan installment amount. So when you're talking about an equipment loan or 50,000, that's going to be a lot smaller. But you know, we have a bunch of different type of like scheduling options. So for instance, we have a few orchards in the middle of the state of Washington where they might be just starting out an orchard. And if you know anything about growing fruit, it takes a long time for them to come into production. So we understand that. And so we have interest only payment options for, I want to say up to 5 years, depending on the crop, but it is always tied to the crop that you were growing. So there would be no real rhyme or reason to have only interest payments for a livestock operation that will have calf sales every year. So it's flexible, I'll put it that way, but gross farming income has to at least be the loan installment amount, which if you're just looking at it on paper, you know, you'll see that some of that payment or operating cost could actually come from your non-farm income source as well. And we're fine with that. So that's kind of how we differentiate hobby farm versus a commercial farm for profit.
Great. Thank you so much, Ransom. Does anyone else have any questions that they'd like to ask the panelists?
I'm wondering, Jessica, if you could expand on what you put in the chat a little bit about AgWest's Ag Vision program and how you see that line between part-time or hobby farm and, you know,
Sure.
growing.
So, you know, one of the tricky parts of a beginning farmer is like, and we see this in the new producer grant too, is what's the fine line between a hobby and a business? When do you cross that threshold? And it's gray. It just is. It is frequently, it's a mindset. It's frequently a time commitment. It's when I started, you know, selling and keeping track of those sales and keeping my receipts finally. But it isn't always like, for us, I did a Schedule F this year. That's a beautiful thing. It's a huge accomplishment and a milestone for a beginning farmer, and it makes it really cut and dry for us, but that isn't always the case. And so we understand that, and we don't want it to be a barrier to entry for people to get into agriculture. And so for that reason, we will, you know, look at somebody's projection. So they're going to say, well, I planted this, you know, in April, and I'm going to sell this next year in the future, and it's going to be a whole lot more than what I did in the past. And we can still make a loan based on that projection. And, you know, to be fair, I mean, the FSA does so many amazing things, and we're so grateful for them. It's also the USDA, it's a government entity. And so they do have a little bit stricter rules, but I will say at the same time, they serve such a wonderful part of the market. We're a preferred lender. We work jointly with them, and we use the 50/50 program. That's a joint financing where, you know, say a loan is $100,000. I wish things were only that much anymore, but, you know, FSA does 50,000, we do 50,000. And in that type of a structure, we can get your down payment down to just about nothing with that type of a structure because of the relationship that we have. So they serve an important market, and so do we. We just are lucky enough to have a little bit more latitude when it comes to what is constituting of a part-time farmer. I don't know, Ransom, anything else you want to add to that kind of dance we have to do?
No, I think you described it well. Yeah, FSA, you know, with the larger operations, it's really helpful to have a kind of split in a big land purchase, for instance. And at least on FSA's portion, they get a lower than normal fixed rate for working with a lender. And so, yeah, we partner with AgWest. There's a few other lenders in our area that we work with pretty often. And that really helps in like expanding, especially when right now with the rates being so high, we've had a lot more joint financing business this year for sure. But yeah, no, I've always appreciated working with you and the other lenders in our area. You guys are really, really helping out like almost the same target group of people with more options to actually like get money into their pocket in some ways. Yeah, we just have a little bit more red tape to go through, unfortunately, but we get it done here at the field office. We try to be flexible where we can.
Thanks, Jessica and Ransom and Marie. I just want to kind of wrap up what I'm hearing a little bit in terms of readiness. So one thing I'm hearing is that having a business plan is very helpful, in some cases essential, and that is definitely something that the Small Business Development Center can help with. Jessica gave some incredible resources from Ag West and University of Minnesota. Those links will be on the website with the recording. The other thing that I'm hearing is record keeping, and that farm record keeping is important, which I imagine chains back to some things about really looking at your business structure, which if you go on the Cultivating Success webinar website, there are webinars that really talk about business structure so people can think through that. But when you're thinking about record keeping, perhaps we could wrap up with first Ransom and then Jessica saying what kind of record keeping you see to be extremely helpful for farms. And then Marie, perhaps you could say how the Small Business Development Center can help farmers start to establish those record keeping systems.
Yeah, definitely. So kind of like I said, we do look for a Schedule F or profit loss. So a really helpful tool is having a separate account that you're going to pay everything for the farm for, and tying that to a program to help you out. So I think of QuickBooks. There's plenty of other different types out there. Having a separate account can be its own process, but it's not too difficult. Even without, you know, income coming in, a business can set up a new account with a bank. Most of them have a certain amount that you have to deposit to set it up, but after that, you know, but in general, if you're not to that point yet, that's okay. You know, have your own receipts. Have you put it down in writing on a workbook. You know, if you have, you know, Microsoft, then just put in an Excel of all of your expenses. That information already helps quite a bit. And I know we have run into folks that, you know, they didn't have enough expenses to file a Schedule F. So what do we do then? Well, if you've had a breakdown of those expenses, I could at least use that so to show what a budget may look like if you're going to expand. And one big thing is, I say 1 or 2 years of a previous management experience. That is your independent. I am financially accountable for my operating cycle this year. But with the flexibility we have with that one is if you have been working on your family farm for years, you have been making management decisions, you've been a part of the finances, you know how that works already. As long as we had like an affidavit from a third party that kind of verifies your management experience, we can use that as part of our justification of the experience portion. So really, you can use a napkin. I've taken napkins or photocopies napkins, like anything. Just put it in writing, at least for our side. Yeah, I think it might be. You might need a little bit more for bank lending, but it's we try to work with folks with where they're at.
I put a couple things in the chat just to share real quick. FarmRaise is an organization that's a little bit newer on the tech side. I know them personally. Jace is one of the founders. She's also from Virginia, from a farm and a ranch. So she's kind of got a farmer's mindset. When they created this tool, her friend's an attorney. They went to school at Stanford and built this platform. We see a lot of our customers using this to manage their receipts and their books. It's kind of like TurboTax for farmers. But what's really cool about this too is you can get a free account and you can sign up to get on their search filter for financial resources. And I know they're actually partnering with the FSA. That was a huge ad for Farm Raised. So if you want to understand the FSA process better, there's videos kind of built into the application as you go, which is just a huge boost. And then it also flags grants in your state. So that's a good one. And then also Farm Commons. That's a wonderful legal resource to help you understand when it may or may not be appropriate, say, to get an LLC, stay a sole proprietor, etc. So those are good farm-specific resources that our customers like to use.
Thank you, Jessica.
I will, thank you. That Farm Raise is a good tool. I didn't know about it. So thank you, Jessica, because what we actually tell everyone is, do you need an accounting system or some sort of books? And yes, you do. Because at some point that creates that intentionality about what you're trying to accomplish. And then when you go in to get your loan, you have things together. But more importantly, you can use them as a tool to build your business and make decisions. And so Farm Raise, I just looked it up really quick while you were talking, looks like an incredible tool that people can use, and we can help people get set up. There's all sorts of accounting systems or different things. We can help people get them in. Most people don't understand their numbers. They don't understand what they even mean. So we can walk them through that process, get them up and running, because at the end of the day, one thing we do recommend to people is, and I know Ransom, you talk, is that you do need separate accounting. You do need a separate place, separate banking account, because now you start getting intentional. And yes, Excel works if you're just starting out. However, when you start needing a balance sheet and some different things like that, then we need to go to a different program.
Well, thank you so much. I have learned a ton myself today, and so I really appreciate the wealth of knowledge that you've put into this room in the past hour. And thank you all for people that joined us for this webinar, and I hope you continue to join us for future series. Any final wrap-up words, Colette?
Well, thank you all very much. As I said, everything will be posted on the Cultivating Success website, and you'll receive a link to that website tomorrow morning, as well as a link to an evaluation. We'd love to hear from you how we did and what topics you'd like us to cover in future educational programming. Thanks to all our speakers for joining us. And Melissa, thank you for leading this webinar.
Thank you.